Hello, this is Japanese Economic Review Channel. Welcome to the January 2026 briefing on Japan machinery orders. Based on the Cabinet Office data, we will analyze capital expenditure trends, demand sectors, and order backlogs. This provides crucial insights into domestic corporate investment and macroeconomic momentum. Let's begin. Looking at the January snapshot, total orders reached 3.94 trillion yen. While we see a 2.0% month-over-month dip, year-over-year growth remains an immense 22.2%. Foreign demand held steady at 1.96 trillion yen, while core private demand cooled to 982 billion yen. Crucially, order backlogs continue to rise rapidly. The 2.0% MOM dip in total volume is a natural statistical cooling following December's massive 19.8% capex surge. Despite this short-term normalization, the underlying macro trajectory remains deeply bullish. Total volume is pushing structurally toward the 4 trillion yen monthly threshold. Foreign demand represents about 50% of our total volume, hitting 1.96 trillion yen. It demonstrated resilience with a 0.2% MOM increase. This steady performance effectively anchors the overall index against the 13.1% contraction in government orders and the 5.5% dip in core private demand. Core private demand, the purest leading indicator for domestic investment, shows a stark divergence. It fell 5.5% overall. However, while the manufacturing sector contracted by 12.5%, the non-manufacturing sector expanded by 6.8%. This divergence requires a deeper sectoral diagnostic. Within manufacturing, volatile raw materials like petroleum and coal plunged 75.9%, dragging the index down. Yet, we see robust gains elsewhere, as transport equipment surged 3.1% and food processing jumped 31.7%. Electrical and general machinery remained relatively flat, stabilizing the core. Turning to the non-manufacturing sector, we see a robust 6.8% expansion that serves as a critical buffer. This growth is heavily driven by domestic services and infrastructure. Real estate surged an impressive 55.4%, and power grew by 33.4%. Wholesale and retail also posted strong gains. This resilience perfectly offsets the short-term pullback in manufacturing capital expenditure. A critical insight is our swelling order backlog. Incoming demand continues to vastly outpace sales execution, pushing unfilled orders near the historic 46-47 trillion yen mark. This massive backlog decouples current factory output from short-term demand volatility, providing a deep revenue cushion. This historic backlog translates to an incredible 15.0 months of guaranteed work. The slight plateau in sales execution is not a demand problem. It is a strict capacity constraint. Supply chains and production floors are operating at their maximum viable utilization. To conclude, January's dip is mere statistical noise after December's capex hangover. While manufacturing takes a tactical pause, non-manufacturing services are accelerating rapidly. Most importantly, with 15 months of guaranteed work, manufacturers are fully insulated. Capacity, not demand, dictates 2026 growth. Thank you for watching the Old Japanese Fairy Tales channel. We look forward to having you with us again.